Hello, and welcome to Virtual Investor Conferences. My name is Bob Power, and on behalf of OTC Markets, as well as our co-host, Red Cloud Securities, we're very pleased you've joined us for our next live presentation from First Mining Gold. Before I introduce our speaker, a few points to note. Please submit your questions in the question box to the bottom left of the slides. Once the Q&A session has ended, don't log out. You'll automatically be transferred into the First Mining Gold booth, where you can continue to ask questions via chat and access additional shareholder materials. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I'm very pleased to welcome Dan Wilton, CEO and Director of First Mining Gold Corp., which trades on the OTC market under the symbol FFMGF and on the TSX under the symbol FF. Welcome back, Dan.
Bob, thanks very much for having us. It's a pleasure to be back, and we were just talking a little bit earlier. We're all delighted at the fact that you seem to have invented this format a few years before everyone else was doing it. So we're all better for all the great work that you all do, and appreciate everything that you do for the issuers that trade OTC. I am going to make a few forward-looking statements as I get into our presentation here, and very much appreciate everyone joining us today to hear a little bit more about First Mining Gold. We have a really, really exciting 2021 ahead of us here, with a number of really significant catalysts coming at us at the beginning of 2021. So we'll set a bunch of preview, I think, of those today, and give a bit of a sense for what we've accomplished in 2020, which I think has been pretty remarkable, and B, a little bit of a sense of where we're going in 2021. So just to kind of set the stage, for those of you who may be new to the story, First Mining is a gold developer focused on a portfolio of Canadian assets, and we immodestly like to say the best portfolio of undeveloped gold assets in Canada. We're advancing the Springpole project, really our primary focus, which is one of the largest undeveloped open pit gold projects in Canada. It's got about a 5 million ounce equivalent resource. We have a pre-feasibility which is coming out in Q1 2021. We're sort of rounding the corner on the finishing touches there. And we're in the environmental assessment process, and I think 2021 is going to be a very big year for us advancing the environmental impact statement, with a goal of submitting that environmental impact statement in 2021. That's a really important part of the permitting timeframe, which we'll talk about in a minute. And importantly, we are fully funded to take this project, we believe, all the way through the key value milestones toward that critical federal and provincial environmental assessment approval, and beyond that, with some of the strategic investments we have and some of the ways that we've freed up some cash in our portfolio of assets here. First Mining is also the largest shareholder of Treasury Metals. We own about 40% of Treasury, which we got by selling Treasury our Gold Lund project, so they could combine it with their Goliath project. Those are two contiguous projects in the same area of northwestern Ontario, just off the Trans-Canada Highway, where Treasury is moving forward on an advanced economic study, PEA, for that combined project, which should be out in Q1 as well. And that's really the first time we're going to be able to talk about what we think are very, very robust economics on the development, sort of co-development of Gold Lund and Goliath. And the logic of putting these two deposits together was pretty straightforward. They're 25 kilometers apart, and you only need to build one mill to process both deposits. So lots of work going on right now and better understanding. There's going to be a lot of trade-off studies that need to be done as we advance this project through, but we've just brought on a great new CEO at Treasury, and we're very excited to see that moving forward. And importantly, we are going to be distributing out to our shareholders, to First Mining shareholders, a portion of our shares and all of our warrants of Treasury, which we intend to do around the time of our AGM next year. Those warrants, which will still have 2+ years of life left on them when we distribute them, are actually, and the Treasury shares are going to trade OTC, which we're very excited about as well. So for all of our U.S. shareholders, it's actually going to have some opportunity for to see, I think, some real value capture from those warrants. But beyond those two projects, we have another 4 projects, including a partnership with an Australian group called Ateco on our Pickle Crow project. They're spending $10 million and giving us some cash and shares to earn into 80% of Pickle Crow, which is a high-grade project in northwestern Ontario. And we think that, they've raised $37 million to execute this earn-in. They're in the middle of a 45,000-meter drill program, and lots of great results coming out from Ateco there, as I think they've really kind of cracked the code on how they're going to find more high-grade gold in this great past-producing gold camp. And then our other projects, Hope Brook in Newfoundland, our Cameron project, we've just added a really strategic piece to, and our projects in Quebec, I think those projects we really get no value for in our share price. All told, we're talking about measured and indicated resources, kind of 7 million ounces, inferred resources, in 3+ million ounces in our portfolio. It really is one of the biggest undeveloped gold portfolios in Canada. Lots of upside, and really, advancing a number of projects on really advanced stage development. And we're trading at a very, very attractive multiple relative to our peers, so still think there's an enormous amount of good value to be had in First Mining Gold share price. We're sitting today at just shy of a 300 million Canadian market cap. For all of those ounces, again, we think this is exceptional value. And importantly, when you look below that, we've got $30 million in cash in the bank. We've got another $14 million of marketable securities, much of which are First Majestic shares that we received as part of a silver stream transaction. And so, we think that ultimately we will monetize those to put those toward the development of Springpole, but still, some interesting balancing of the leverage there. Another 16 million plus Canadian to come from the stream, of which 7.5 million US, about 10 Canadian, will be coming to us when we announce our pre-feasibility study in Q1. So very healthy treasury to get us all the way to the finish line, and we'll talk a little bit about how we see some of the value of these other strategic investments. Importantly, very good share trading liquidity. We trade on average about 2 million shares a day on the TSX, and another 700,000, many days over 1 million shares on the OTCQX. So great following and great trading and liquidity from predominantly our U.S. shareholders who trade OTC. And you see that in our shareholder base, still largely retail, but a small but growing institutional ownership, which I think is only going to increase as we continue to advance Springpole, our flagship project. And this just talks a little bit about some of a couple of the deals we've already talked about, Ateco and the earn-in on Pickle Crow, us having sold our Gold Mine project to Treasury Metals to combine with Goliath, and our Silver Stream funding. I think those 3 transactions have done a few really important things for us. Number one, it's really answered the question as to where we were going to get the capital to move the project forward. There was real concern through 2019 and the first half of 2020 about would we have enough money to complete the permitting process, and I think we can now answer that unquestioningly yes. And number 2, it started to show that this portfolio of assets actually have asset value. You can now point to, instead of saying we think Gold Mine's worth, the project is worth $50 million, you can point to shares times share price. And similar thing with Ateco and the value of our project interest in Pickle Crow. These are really meaningful numbers still, and I think lots of value to surface from our partners who are moving those projects forward. And now we're not in a hurry to monetize those, but I think they provide longer-term real strategic flexibility to us. And this is just to show, it's been a really busy year, and I think we've benefited in part from the rise in the gold price. But importantly, our projects don't need a $2,000 gold price to be economic. I think we're going to demonstrate really, really robust economics at kind of the current long-term forecast, $1,500 type levels. I think our projects are going to look extremely economic. And we're still sitting today, if you look at this, these levels of where we're trading on a kind of dollar per ounce basis. We're trading, there's still multiples for our share price to go up to get us up, even just to the average of the advanced developers. And I think when you look at our portfolio, the stage of development, the quality of the assets, and the jurisdiction that we're in, we deserve to be at or above that developer average. So how do we close this gap? Quite simply, we keep moving forward with de-risking our assets and ultimately demonstrating that value, particularly at Springpole, which, as we kind of think about our value here, the market cap, this was at the beginning of December, 270 Canadian. You take out the cash, you take out the marketable securities, the stream proceeds, and our ownership of Treasury and our ownership of Pickle Crow and the Teco, our partner. All of those things account for about $200 million of the $270 million of our market cap. So you're getting Springpole, one of the largest undeveloped gold projects in Canada. You're getting Cameron, a very attractive, in total million-ounce resource. Hope Brook, established resource in a great jurisdiction, and all of our projects in Quebec. You're basically getting all of that for $70 million Canadian of value, where we think that we can really point to and demonstrate asset value in this portfolio in excess of $2 billion. And so there's lots of room for us to continue to move that up. And importantly, on how we do that, we need the team. And I think we have made some very important changes to our team over the course of the time that I've been here. So I've only been the CEO since the beginning of 2019. The company was founded by Keith Neumeyer, obviously well-known entrepreneur in the mining sector, the founder and CEO of First Majestic Silver. But we've been making some really important additions to our team, and most recently having added Steve Lines, who's joined us from the Greenstone Gold Mines joint venture, which is the Hard Rock project that Centerra and Premier are moving forward. Very similar sized project to Springpole, very similar in its complexity, in the same jurisdiction with the same regulators. And Steve and his team basically took that project from a scoping study through to construction ready over the last 6 years. Done an amazing job. We're delighted to have Steve join us. He joined us at the beginning of December, so only not yet a couple of weeks in, and he's making a great contribution. We're very excited about that. So we'll talk a little bit about Springpole here, and I won't go into too much depth. Just want to touch on a few highlights and then make sure we leave lots of time for questions. So as we said, this is one of the largest undeveloped open pit gold projects in Canada. Indicated resource of 4.6 million ounces. And you look at that on an equivalent basis because Springpole has quite a bit of silver in it. That number gets up to like 5 million ounces. The economics in the PEA that we put out in October of 2019 showed a very robust project at $1,300 gold price. So as we finish up the PFS here, there's been an enormous amount of work done. Really good quality technical work, understanding trade-offs, looking at various, particularly environmental avenues for us to make sure we're designing and putting forward the most environmentally robust project that we can. So I think there's going to be a few interesting changes to the design that'll be coming out in the pre-feasibility study, and again, we're anticipating having that early in Q1. And in terms of a jurisdiction, Ontario, I think, is one of the best, if not the best, jurisdiction to permit projects. They permitted 4 big open pit mines in the last 5 years, and all of them with very similar characteristics to Springpole. And we have great supportive and well-informed regulators who really work with us to advance the project, which we're very excited about. But importantly, and as a refresher for those who've seen the project before, the development plan for Springpole, the deposit sits under the shallow bay of a lake, and the development plan involves building a couple of small copper dams. Those are less than 1 kilometer long and average about 15 feet high. So these are not really big structures in the context of building a mine. But these provide, if there's any sort of explanation for our value disconnect, this is it. And I think there is a perception of a real challenge in permitting this and a perception of a real challenge of designing and engineering something like this. And I think our pre-feasibility study should help give real credence to the point that we make, which is we've now studied this aquatic environment and the terrestrial habitat for 10 years. We've done an enormous amount of engineering, including bringing in a specialist group that really does nothing but engineer copper dams like this around the world. And I think when you look at what we've done to de-risk this element of our development, it really comes down now to our social license and our ability to demonstrate that our local communities are going to want to see the project built in their traditional territory. And we've been in consultation with our community since 2018, and I think we have a lot of avenues for real win-win to move this project forward. Still lots of work to do, but a really good and constructive dialogue. So we believe that this is not an impediment to getting this project moved forward. A little bit about the economics on Springpole from our PEA, and again, we're looking forward to updating this with our PFS and declaring reserves for the project for the first time early in Q1. But why is this meaningful? This is meaningful because this is one of very few projects that can produce more than 300,000 ounces a year in Canada. It's a very, very small number of those projects. And with the grade at 1 gram gold and 5 grams silver, why does that work? The answer is it works because proximity to infrastructure. So we're going to be on grid power. It's got a low strip ratio. The ore body itself is a homogeneous ore body, which actually has pretty continuous grade. Which is really helpful to understand that when you go to mine this, you can mine it really, really efficiently. And I think that's something that's been overlooked at this project in the past. And ultimately, strategically, why does this matter? It matters because Springpole is fundamentally one of the largest undeveloped gold projects. If we're producing today, it would be the third largest gold project in Canada. So very, I think, strategically meaningful to a gold industry that is coming around the corner to understand that when it looks at its production pipeline 10 years out, there's just not a lot in the cupboard. Big mining companies are going to need to add projects to continue to bolster their production profile. So we think this is one that we're going to have ready at exactly the right time that the industry needs it most. Our development timeline is a little bit in flux, and we had as a goal to submit our environmental impact statement by the middle of next year. I think if we've had any impact from COVID-19 in our operations, it's really slowed down some of the discussions around consultation with our communities. And that's in large part because our communities have been focused on the health of their communities, and it takes up an enormous amount of their bandwidth in doing that, completely understandably. But our goal is to get this environmental impact statement submitted in 2021, and then that starts in Ontario a pretty reliable 24-month timeframe. So again, aiming that we can have our federal and provincial environmental assessment approvals in 2023. And our pre-feasibility study coming out early in Q1, and then gives us really a good long time to do some long lead time work and further technical study around a feasibility study, but ultimately with a feasibility study coming in 2023 as we're closing in on those environmental assessment approvals. And those are the really key value milestones here moving forward. So a really important next few years in the development of this project, but I think an enormous amount of value to surface. And just quickly, as I'm conscious that I'd like to get to questions here, we'll talk a little bit about Goldline and Goliath. We own about 40% of Treasury Metals, who is going to be coming up with a really interesting, and we anticipate a very robust development project, and a PEA demonstrating that on combining Goldline and Goliath. Goliath is an open pit transitioning to underground ore body. Goldline predominantly open pit. But these projects, the deposits sit about 25 kilometers apart. And I think there's immense rationale in building one mill a little bit bigger to be able to handle both deposits. It makes for a much lower risk development scenario. And we think that this is an area that ultimately you're going to mine here for 30 years. I think this is a 5 million ounce district that just needs more drilling and development. But that's something that I think Treasury will have a reasonable drill program ongoing. It's really important PEA, which I think should pretty much reset the stage for what I think is going to be a better understanding of the project going forward. And our partners at Ateco Minerals, who are advancing Pickle Crow, again, importantly, in the middle of a 45,000 meter drill program in what was one of Canada's highest grade underground producing mines. So lots of news coming from there as we're going to see more high grade drill results coming out over the course of the next few months. And we're optimistic that they'll complete their earn-in in 2021, at which point we'll own 125 million Ateco shares, and they'll pay us $4 million of cash, and we'll continue to own 20% of the project. So great partnership that's working very well there. Just in summary, we've got lots of important news coming up with Springpole, particularly around the pre-feasibility study early in 2021, moving forward on the environmental impact statement to get that submitted in 2021, and lots of good news coming from Goldline, Goliath, from Ateco, and from the balance of our portfolio assets that I think there's opportunity to continue to unlock hundreds of millions of dollars of value from those projects that people don't see right now. So with that, I think we will leave it there, and I will be happy to transition to taking a few questions here. And thanks everyone for putting the questions in. So I will start with this first question. Do you see any potential interest from the senior mining companies investing for a stake in Springpole or First Mining? I would say yes. I think I'd characterize the activity of the senior mining companies as increasing, and I think particularly around sizable assets in good jurisdictions. And it's become pretty clear to us that, there just aren't that many projects like Springpole around the world. And I think some of the biggest mining companies in the world have taken a real view that this part of Ontario, with all the increasing activity around Red Lake, this is a pretty unique project. So it's something certainly that we would consider, but consider it at the right time and at the right value for sure. But I think more broadly, beyond just Springpole and First Mining, I think you're going to start seeing larger gold companies really focused on their development pipelines, because there is a real cliff coming in this industry, kind of from the back half of this decade. And so when there's just been years of underinvestment, or even worse, disinvestment in projects, and it's really not been a lot of investment in projects since 2012, you just can't catch that up through exploration in a couple of years. So I think this is really setting the stage for the decade of the developer, and I think we're in a really good position to be able to benefit from that. The next question, why do you think First Mining is trading below peers on valuation? Listen, I think it boils down to a couple of things. Number one, I think it is this perception issue on Springpole. around the deposit sitting under the Bay of the Lake. And I hope our pre-feasibility study is going to demonstrate, certainly from a technical perspective, that we're able to deal with that. But I think that's part of it. The other part of it is portfolios are complicated for investors to understand. And I would tell you that at the beginning of 2020, I think investors treated our portfolio of million-ounce gold projects as liabilities and not assets, right? We only ever got asked about the holding cost of these projects, not about what they were, how we're going to surface value. And I think we've demonstrated we've taken 2 of those projects this year and turned them into $150 million of value, which, by the way, was our market cap at the time that we started doing those deals between Pickle Crow and Goldland Goliath. So I think there's, we still have Cameron, we still have Hope Brook, we still have our Quebec projects, which have an enormous amount of value. Each of them should be worth that 50 to 100 million, even if we have other partners moving them forward. So I think we need to continue to demonstrate our ability to surface value out of the portfolio. But I think those are the 2 real drivers. And on Springpole, I think that value only really closes as you advance toward the milestones that say that you can get your permits to develop the project. The next question, what percentage of the Treasury shares will First Mining be retaining after the distribution? It's about a little bit less than 20%. We need to figure out what the exact numbers will be. And part of that is, how much capital does Treasury need to raise for its next phase of work. So there will likely be some dilution, which would take the percentage down. But our total ownership of shares, I think, will end up being in that range of about half of what we took, which I always get confused because Treasury's been through a 3-for-1 share consolidation. So if it's about 40 million, 43 million shares, I think we'd continue to have 20 million plus would be my sense. The next question, when will the project start commercial production? And I assume we're talking about Springpole. That, in the timeframes that we're outlining with environmental impact statement approvals, late 2023 and other permitting approvals, 2023, early 2024. We're just finalizing now what we think a construction schedule might look like as we come through the PFS. It's in the range of 2 to 3 years, and it depends a little bit on when in the year you can start, because the development plan will have some important elements of building the cofferdams and dewatering. But there's lots of work that can go on the plant site, et cetera, the infrastructure, as you're doing that. So, I think we would be guiding people to 2027, but there's still quite a few variables that we need to see work out from there. The next question is part of the reason for your low dollar to gold price. You have so many balls in the air that investors can't have confidence in what they'll own a few years from now. How stable is the portfolio? How confident can we be that you've got the dollars to get through permitting? Will another neat deal bring unpredictable dilution? And listen, we've listened to our shareholders a lot over the course of the last couple of years that I've been here, and really understand that concern of dilution. Because I think every share we issue with Springpole trading at the values that it does, we have to issue very begrudgingly because, you are diluting. Each shareholder gets less of an interest in that, $1.5 billion, $2 billion of asset value. So, listen, I think that the portfolio question, the portfolio will continue to surface value from the portfolio. I think that adds to the strategic flexibility of the company. But going back to the chart that we showed on the relative value of the constituent assets, the biggest driver of value here is Springpole. And I think our shareholders can have absolute confidence that with what we have over the time frame that we need to move Springpole through this EA process, between our strategic investments and everything else, the cash on the balance sheet, the silver stream values coming. I think our shareholders can have every confidence that we have all of the capital that we need to get Springpole through this permitting process and to that construction decision. And what we do with that construction decision and the timing with Springpole ultimately gets dictated by the gold price and what's the right thing for us to be doing from a shareholder's perspective. So, listen, I really appreciate everyone tuning in, and thanks very much. I realize here I'm out of time, but thanks very much for joining us, and feel free to stay tuned and join us following on into the booth after this.